Hi, many of you must be wondering what is the swing trade? So if you want to understand how a swing trade works, when you should be taking a swing trade in the stock market, then wait till the end of this video and you'll get a very good idea about what is a swing trade and how you should be implementing it and in under what circumstances. Hi, my name is Paresh Desai. I'm a chartered accountant. I've got 15 years experience in coaching and 25 years experience in the financial markets. So today we're going to see what is a swing trade. So let's begin. There are two types of trades. One is called as a momentum trade and one is called as a swing trade. So momentum trade, as the word suggests, means a trade which you're supposed to take when the price is in a momentum. It's going up, or it could be on a downside momentum also, right? And a swing trade is something which is normally taken in the phases where the market is sideways, right? So a swing trade would be, you have to understand how a swing works. So we have seen a swing, it would go from one side to the other, like a pendulum, correct? Now when on, let us say if it goes on one side and it is at the topmost point, does it go straight and create an entire circle? No, right? So it goes back, right? And then it travels all the way up to the next side, right? So similarly, the swing trade would be taken like that. So when the markets are at a high price, that is a time when you can short the market and ride all the way down up to the fall. A swing trade on the long side can be taken when the stock prices have corrected up to their supports, or sometimes the stocks might have come down and they could have come up to their standard retracement levels. So from there, a long swing trade can be taken. So when the markets would be expected to go down, that is a time when you take an opposite trade. So the similar way, like how a swing works, like it is going in one direction, it is not going to continue. So you take the trade on the opposite direction. That is how. So both there are two ways how you can take a trade. One is a long trade. When the markets are already corrected, you take a long trade. Long means you buy over there, and when it goes up to the next level, you sell or exit. The second would be a short trade where the market has already gone up, and over there you will find that there could be some resistances, and you could take a short trade. It could be a swing trade on the short side. Let me show you by an example on the Nifty. What you can see on the screen is the chart of Nifty 50. So on this line over here, this was a support, right? And on this support, when the price came near the support and started going up, this was a trade on the long side for a swing trade, for the trade going up. Okay, so this was like a buy over here. This was a long swing trade. Similarly, for a short swing trade, on the charts, if you see, this was a resistance. So when the price came here near this resistance, this was a time when there was a nice short trade on the swing. Okay, when the people are expecting that the price would go up, but if there is a resistance here, this is where the swing has already reached on the other side, and now it's the time to go on the opposite side, right? So this is a short swing trade. So यहाँ पर आप short कर सकते हो, and then you carry all the way till you find the move is there, or till at least you find another buy signal. Okay, so this is how the swing trades can be taken on the charts. So I hope you understood like how the long as well as the short trade would work on swing trade. This is a very brief and the easiest way to understand what you mean by swing trade. I hope you got a good idea and you understood what the swing trade is and how and when you're supposed to take it. If you like this video, don't forget to subscribe to my channel, and also you can comment below and share it with your friends. Once again, this is Paresh Desai. Thank you very much, and I'll see you in the next video. Bye.